Good day, ladies and gentlemen. Today I want to teach you a powerful strategy that you can use to make money in the forex markets. Okay, so this strategy works best on gold, but you can backtest with other pairs to see how it goes. So the very first thing you need to mark out the obvious high and low that actually pushed price just before 8 p.m. New York time. Okay, before 8 p.m. New York time, which is like before the beginning of the Asian session. If you are using GMT plus 0, if your time zone is GMT plus 0, then definitely it's going to be 12 a.m. okay, it's going to be 12:00 a.m. okay, which is like midnight. Okay, so if you are GMT plus 1, if your time zone is GMT plus 1, then it's going to be 13:00 a.m. okay, that's basically 1 a.m. But if you are using New York time, then it's 8 p.m. So for me, based on my backtesting, the strategy I want to show you now, this is my obvious high and low that kind of pushed price, okay, just before the 12 a.m. period. You can see my period separator, okay, which stands for 12 a.m. So this is where my 12 a.m. is, because my MT5 is on GMT plus 0. Okay, so I've marked that out. The next thing you want to see is price break through either the high level you've drawn or the low level. Once it breaks through, you want it to come and close inside the boundary. So once it closes inside the boundary, you take a trade and target the opposing liquidity. So the ideology behind it is that you're going to have liquidity resting above this high and liquidity resting below the low. So once the liquidity has been swept, price is expected to come back in and close. So once it closes inside the boundary, the next places we would want to go to is to target opposing liquidity. So if it takes out the top, it will target the opposing liquidity, which is at the bottom. So we look to take advantage of that and make money. Okay, but something else you need to understand, there's one of my videos that I posted where I talked about what moves price and why price moves. Definitely, irrespective of the fact that you have liquidity here and liquidity below, price can also generate liquidity. So aside from moving towards where you have liquidity, it can generate fresh liquidity. What am I trying to imply? I mean, if price takes out the liquidity at the top, price can decide to retest this top level and keep going up to create fresh liquidity, totally ignoring the liquidity below for a later time. Okay, so it will come back later, maybe later in the future. It could be next 2 weeks, it could be next month. It all depends on how the market is going to move. But basically, what we are trying to take advantage of is the scenario whereby definitely you have liquidity at the top and bottom. Then let's say the liquidity at the top gets taken out by price, then price comes back and closes below that boundary, telling us that the next target would most probably be the liquidity at the bottom. Okay, there is also another scenario whereby you have the equilibrium. I talked about it when I was discussing the reason why price moves. Okay, so sometimes instead of price to come down, let's say that it has taken the liquidity at the top, I want you to really understand, have an in-depth understanding of this strategy. Once price has taken the liquidity at the top, for example, it comes back and closes below. The general ideology is that it would come to take out the liquidity at the bottom, okay, resting below the low. But there is also a scenario of equilibrium whereby price moves to the equilibrium and reverts from there. So price can decide to come to this equilibrium level. You will still be putting your TP here, whereas price will just bounce off from the equilibrium, because that's one of the objectives of price. Price always balances, to the equilibrium. Okay, it can balance to a fair value gap, and that's inefficiencies, and it can also come back to equilibrium and move in the opposite direction. Okay, so the idea is you need to take off some profits when it gets to 50%. Then you can move your stop loss to break even and ride the trade to the opposing liquidity. Okay, so let's move. So you can see what happened here beautifully. price went below the level in order to grab the liquidity below the level and gave us a perfect trade closing above the level, telling us that price wants to move in the opposite direction in order to take out the liquidity at the extreme end. Okay, so price has taken out sell side liquidity, then it's going for buy side liquidity, and that's exactly what happened. You can see you would have made money with this particular strategy. Okay, and definitely, like I said, take out some profits, you know, take partials at 50% because it can reverse at 50%. You can see when it got to that 50% region, you can see that there is a big red candle that came down, but the buying momentum was strong enough to keep pushing it until it got to the opposing liquidity. Okay, so after this day, you are done with that particular strategy and you have made money with it. Now the next thing you do is you mark out the obvious high and low, you know, before the 12 a.m. period. Okay, here is my obvious high and my obvious low. I have an obvious low right here. This push price, let me put it here, this push price. Okay, so this is my range now, this is my high, and I'm taking this as my low because price was just dancing around here. Okay, so let's see what played out. Okay, so the top was taken out. Let's see, the top part was taken out and there was a close below. You would have entered after that red candle closed below the level. Place your SL, you know, a reasonable peep. Since this is your target, you know, you can go for 1 2 3, so you should know how to position your stop loss, you know, give it a little bit of room. Okay, so price was not weak and take you out and still move in your direction. Okay, so what happened? Price got to equilibrium. Like I said, price got to equilibrium 50% and did what? And reversed, moving in the upwards direction. Okay, so here's my obvious high and low for this day. So the trade for that day, we're done with that. So this is my low just before the 12 a.m. This is my high right here, and this is my 12 a.m. Period. Okay, when we start a new day. So what happened? Price broke and took out the buy side liquidity at the top. You can see, took out the buy side liquidity, but decided to generate fresh liquidity by not coming down to seek the liquidity below. So we wouldn't have taken any trade here because our system is for price to close below and then we take a trade targeting the opposing liquidity or at least the equilibrium level. Okay, so there's no trade on this day. So where's the high and the low for the day? This is the obvious high for the day. Please don't get it twisted. I'm not looking for the high and the low of the day. I'm looking for the obvious high that pushed price, you know, reasonably before 12 a.m. for GMT plus 0 or 8 p.m. if you are dealing with New York time. So this is the obvious low that I have that pushed price just before the 12 a.m. mark. Okay, so let's see what played out. Okay, so price took out buy side liquidity at the top and then closed below. So you would have entered, you know, at that level where price closed. This is the level I'm talking about. You know, price went above the level, came back and closed. Reasonable stop loss, then target opposing liquidity. Okay, so you can see what happened. Price even went far below. Okay, so price went as far as taking out the previous day's low. Okay, let me copy this and see what the previous day low is. Previous day low is somewhere around here. Okay, somewhere around here. Let's see. Oh, price took it out. So beautiful, and that's the end of the week. This starts us a new week. All right, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.